RBI's Monetary Policy Committee has recently decided to cut the repo rates by 25 basis points and reducing it to 6.25%. What does this really mean for consumers? What does it mean for industry? How does it impact the overall ecosystem? And what does it really mean specifically for those who are looking to invest in a new property or purchase a new home by taking a home loans, or those who have already taken a home loan and have recently invested in a property? We are going to dwell upon all these things in today's episode of The Property Show. Namaskar, I'm Prasoon Kumar, and we are going to talk about the repo rate cut and its impact on consumers, industry, and business as such. To have this discussion, we have an esteemed set of panel today. In the studios, we have Mr. Rajat Mohan, who is a chartered accountant and senior partner at AMRG and Associates, one of the premier tax consultancy and advisory firms of North India. And he is a prolific author as well. He has authored many books on tax-related matters. He will be giving us his insights in and around the impact of this repo rate cut from financial taxation and its impact on consumers and industry at large. And we also have Mr. Sunil Agarwal, who is the founder of Black Olive Ventures and SARE Valuers, which is a real estate valuation company. And he is a financial advisory expert with more than 30 years of experience with ICICI Ventures, HSBC, DS Group, and Colliers International. Online, we are joined by Mr. Ravi Agarwal, who is co-founder and managing director of Signature Global India, one of the premier developers based out of Delhi NCR and North India. And we have Mr. Pawan Kumar, who is founder and CEO of White Lotus Group, a luxury real estate developer from Bangalore. Pawan is an IIT alumnus and a serial entrepreneur. And we have Mr. Nimesh Bhandari, who is running the home loans business at Magic Bricks. So we have a wide variety of panels, from developers to taxation experts to people who are running the home loan business. And we will have a variety of perspectives coming in today. So let's start with the discussion. And the first question that comes about, while the RBI has announced this 25 basis point cut, the question that comes into mind of consumers is how much of this is going to be actually passed on to consumers at the end. While SBI has recently announced that they are going to reduce EBLR by 25 basis point as well, but would want to understand, Rajat, from you, how, looking at past trends and overall macroeconomic scenario right now, how much of this benefit do you think is going to be ultimately passed on?
So, Prasoon, thank you so much for having me here. What I believe is the reduction in interest rates would depend on a lot of things. Starting from what the balance sheet of the bank says, what is the policy of the bank, do they want to get into new customers, are they eyeing for more business, what is their profitability. So, public sector banks, listed banks, large banks may have to follow the suit, and they may not. So there is no law in India which says that the entire saving or reduction in, the interest rates has to be passed on. They are not mandated to pass on. It's only the market dynamics, the supply demand, their internal policy that will govern. So I believe the process of passing on this benefit would be very slow, and likely, SBI has done. So other large banks would be forced to done because of the market forces.
Okay.
The process will be little slower, and maybe smaller banks may not even do it for quite some time.
Okay. Nimesh, what's your take on this? How do you see this?
Well, Prasoon, what we see is that a lot of banks have already reduced the interest rate. So Indian Bank, for example, has made it 8.15. It was 8.35 earlier. Central Bank has made it 8.10. It was again 8.3 earlier, right? We know because we do a lot of cases in Bajaj Housing that there is, they have not officially announced it, but there is more flexibility to reduce interest rate if the customer pushes for it. And there are also talks that HDFC, ICICI Bank will also follow suit. So what we see is that it's a very hyper competitive market, and especially being JFM, every bank wants to demonstrate and clock big numbers, and hence once 2-3 banks follow suit, which they have done, other banks will be forced to do that, right? I forgot to mention Canara Bank has also reduced the interest rate, right? So almost every bank is following that trend and reducing the interest rates now.
Okay, so that's some good news for consumers, and as Rajat said, it might take some time, but eventually we all hope it happens. Now, let me take it to the business side, and Pawan, please tell me if do you expect, because of the interest rate going down now, developers would be now looking at borrowing more funds, for from banks? I mean, are they going to get any benefit out of this?
Firstly, thank you for having me here. Secondly, if you see the business model of developers, right, there's obviously a constant borrowing from developers for various projects. It was usually a basket of projects, and all projects might be in a different project life cycle at different stages, depending on what cycle you are in. And typically, a developer, usually in a project life cycle, ends up dealing with all sorts of lenders, right? It's not just a bank. They deal with even AIFs, NBFCs, private equities, different. So, in our experience, we have seen that this rate cut might not necessarily transfer directly as an advantage to a developer borrowing, because the kind of lenders they deal with, unless it's a bank, which is very rare, right? Because of a lot of RBI restrictions and all of that. So it's not that this rate cut will mean that developer will start borrowing more. It's obviously based on the requirement, of course, health of their balance sheets and their requirements and all of that. But having said that, I see that from the other side, the way the developers might benefit, since because of this rate cut, home loans will become cheaper, EMIs will become cheaper. There are a lot more sales which might pick up, which might help the developer in his cash flows, and that might actually help the developer in doing the projects faster. So I don't really think just because of this rate cut, developers will say that now I want to borrow more. Obviously, a lot of it depends on their personal thing, but I think the other side benefit would be much more with cash flow start coming in from the customer side of things, is what I look at it.
Sure. So you do expect demand stimulus to be there, this to work as a stimuli for demand, and therefore that may encourage developers to probably maybe borrow more or start new projects. Raviji, I will just kind of try to rephrase this for you. Any reduction in interest rate, one segment that gets emotionally impacted or psychologically impacted most is the segment that operates in the affordable housing zone, right? Now, tell me, do you think any such positive sentiment therefore would translate into affordable housing getting revived, because we have not seen much of an action in that segment over past couple of years? Only the premium end of real estate that has been doing well. Do you see that happening, and therefore some positive development coming out from there?
First, I want to welcome this rate cut, and it's a very positive step after a long gap of almost 5 years. Secondly, I think so. It will have the multifold impact on the overall industry. Thirdly, I think so. The real estate is a thing which is a capex-driven business. The huge capex always, and actually the contribution towards GDP of real estate is also increasing. Whenever the government does something in the positivity of real estate, it will have multiple impact. There are two things: first, the developer; second, the customer. I think so. On the developer side, if this benefit is passed on, as the developer is a lot of capex need to invest in, I think so. It is a better positive towards that sector. While the lower interest rate reduce financing cost, developers continue to face significant challenges such as high land acquisition costs, increasing construction expenses, and delays in approvals. I think so. It will positively impact it. Secondly, on the customer side, I think so. The rate cut is very positive, because the prices in real estate is increasing and the affordability is now getting challenged. But I think so. If we see the recent budget, it is always focused for the middle income housing or the affordable housing. From so many years, the budget is the first agenda is increase affordable housing, the middle income house. I think so. This step is in alignment of that. If this rate cut is passed on to the customers, then home loan will be cheaper. They can afford home loans at a better rate, because the rate is increasing per square feet. The rate is increasing. I think so. It will be better step for home buyers also.
Okay, so that's a very positive take on this. Coming back to you, Rajat, and Sunil, when an interest rate is cut for a consumer, either the EMI reduces or the tenure gets reduced, right? And a consumer has a choice between the two. In your experience, what works better for for a consumer?
So, Prasun, I believe this is a very, very individualistic decision. So, if I have money in my pocket, I would like to pay upfront, have lower tenure, and like to save a lot of interest cost, because that is one possibility. If I don't have money in my pocket, I would like my EMIs to go down and keep the tenure as same. So, India is a vast country. So many people, 50%, 40% are below poverty line, etc. And we are a developing nation. So, I feel a lot of people would like to continue towards the tenure, maintain a tenure, but lower their EMIs. In the first place, if they had some money, why would they take loan? So, but both the options are possible, and it depends upon the individual what does he wants to opt.
Okay, Sunil, what about you?
My take on this has been that in India, nobody lives through the tenure of the loan.
Okay.
So if the loan is given for 20 years, 25 years, various studies have shown that it was 4 to 5 years, 10 years ago, people used to repay back their loans. Now they will do it in 7 or 8 years. So there is a tendency of most of the customers that they do not really want to live with a long loan. So most of the customers opt for reduction of tenure. Second thing is that there is an operational issue about it, that your ECS is given to a certain instruction, and that ECS is then to be changed. A lot of paperwork has to be done.
Sure.
The third thing is that you look at this 0.25 basis point cut for a consumer. That translates to some 5,000-6,000 rupees of saving per annum for a 50 lakh rupee loan. And we all know that the average loan tenure size in this country, at least a ticket size, is about 30-35 lakhs. So most of the consumers, जो impact आएगा उसकी FSI, उसकी EMI पे, that will be so marginal that I don't think so people will try for 300 rupees a month or 500 rupees a month, try and lower the outgo every month. So it is very unlikely that, and otherwise also, why should I live with a loan for longer period of time?
Sure.
India is very averse to loan. वो अपना tenure कम करेंगे, is my take.
Okay. Let me go to Raviji again. As you mentioned that the sentiments, the demand sentiments may improve, and that would give fillip to the industry. Do you foresee that because of this sentiment improvement and maybe demand improving, developers will be focusing on launching new projects and therefore bringing new inventories to the market, or cleaning up the existing inventories? What could happen?
First, I want to say in India, particularly in cosmopolitan cities like Gurgaon or like the demand supply gap is still so high. Customer needs home, but the affordability level is getting down. And demand supply is so high. Means, suppose I can take the example of Gurgaon. I have data on that. It's a report published by, it's a report reported by Times of India, presentation done by Gurgaon Mission Development Authority. This is a big gap. The present population in Gurgaon is around 22 lakhs and is expected to be 42 lakhs by 2031. Means if we take the times of construction is just 4 years, means 25, 26 and 27. We need 5 lakh new homes. And the supply side of every year is just 27,000 units. The demand supply gap is huge. I think so. It's continue to be launched. New projects will be launched. Demand is high. There is no demand deficit as such. It's new launch will come and continue to be observed. I think so. I'm very, very hopeful and positive about it.
But we have observed in many markets where there is a bit of this equation doesn't play as straight, because the demand is in certain segment and the supply comes in a different segment altogether. Therefore, that creates that imbalance. And therefore, in that context, do you think any positive sentiment development around the category is going to help liquidate the existing inventories?
I think so. Developer need to decide in what segment they want to play. We are mid-income focused company, affordable housing is a mid-income focused company, and always at the mid and the bottom of the pyramid, demand is high. And we are continuing to focus on that. And I think so, it will improve the sentiment. Whenever something comes positive, for the home buyers, it always impact positive.
Pawan, since you deal in luxury real estate development, mostly, the overall buoyancy that has been there in the premium and luxury housing segment over past couple of years, that bodes well for that segment per se. But with these kind of initiatives, which while 25 BPS cut may not be a big kind of a monetary reward per se, as Rajat and Sunil were mentioning, but the positivity that it adds, the psychological impact that it has in the overall sentiments in the category and amongst buyers. How do you think that's going to impact the luxury and the premium housing segment further?
Interesting point. See, this rate cut will have multiple impacts from different angles, right? So it's not just the EMI of a customer coming down. This also brings a lot more credit into the system, right? So it is not just for a home loan, right? So it also brings a lot of credit into the system, which will make a lot of industries invest a lot of capex in the industry, right? So a lot of investment that will lead to a lot more job creation. So this will have a domino effect across, which will bring a lot more new buyers into the market who probably have been sitting on the fence, because for them, probably their new job has been created or they got promoted, and then there is a rate cut also. So there's a lot of sentiment which goes around, and because of this increased credit availability also, even developers will have more access to funds, which will help them push their projects faster, right? They can speed through their construction. So they can speed their construction, which will in turn improve the sentiment, and your buyers are buying more because your developer is building faster, and also the home loans are cheaper. So this whole effect will make a very good effect. So obviously, disciplined developers will definitely use this occasion to not only clear their existing inventory, but also use those free cash flows from both sides, from your customer side also and your lender side also, to be able to get into new launches also. So I definitely see that launches will be also more, and particularly in luxury segment also, if you see, since a lot of industrialists will also end up increasing their capex. For them, the sentiment also is high, right? They start upgrading their homes and they start buying new homes for the next generation. They start investing in investment also as real estate. So the overall sentiment is going to have a very good effect because of all this.
And so taking that point forward, the luxury housing financing per se, right? Because even a small 0.1% or 0.2% at that level, when the financing is in multiples of crores, etc., is significant amount. Do you think that getting positively impacted?
So definitely, any small rate cut is definitely has a positive impact. But like even Sunilji was saying earlier, the impact of this on overall EMI per se, calculated on yearly basis, might not really impact a luxury consumer thinking that, now I'm going to make a decision because this has an impact. That impact is going to be very less actually for them to be able to push a decision. But the overall sentiment and the momentum going high in the market, right? Because the overall sentiment of the industry being very positive, which will be a positive, because the last decade or so has not been very great for residential real estate. Because of the sentiment going up now and the market being very good, this particular news, the overall sentiment being high, everybody's sentiment is very high and they all want to invest more. So that will definitely have much more impact than this.
Nimesh, from a home loan dispersal point of view, therefore, this sentiment improvement that everyone is talking about, how much do you see this impacting the overall demand and dispersal of loans across different segments?
Yeah, so Prasun, what we have seen is that a lot of customers who are waiting on the fence, we have been discussing with them for the last 3 months, and they said that I'm still finalizing the property, I'm in process of finalizing the property. Suddenly there is more interest and they want to quickly close the deal. So certainly, as everybody is saying, and I concur with them, that the sentiment helps. While 0.25% will not change anybody's life, but customer generally feels that this is in a good scenario, the market will do well, the property rates will appreciate, my burden will also reduce marginally, so I should then get and make the decision faster. So that certainly is helping the industry, and I can see that as well as in our numbers.
Now, There's another fascinating trend happening in the industry where we have been seeing that while the demand has been stagnant over a period of time, and the supply has been going up across different segments, but prices have also started hardening, right? And typically when demand is not really going up and supply is moving up, prices should ease out, right? But we have seen a very different trend in recent times. What do you think is driving that, and how do these positive sentiments therefore because of these kind of decisions impact demand overall then?
So I think this is the sign of a mad market. 1.5 years ago, I wrote an article called Madness Cometh. And there were visible signs when the stock was available at 7,000 rupees in Noida. Ready stock, ready to move in. And the new launches were done at 8 or 9,000 rupees. So what is happening today is that developers will drag their feet. They will not accept easily that demand has fallen or the sales have stopped. You hear this from the marketing firm saying, you know what, market thoda rukne laga hai. Deals थोड़ी अपनी लगी हैं. But I think this is the stance of real estate industry, that they will hold on till they can manage it. And then they will go for borrowing, they will go for structured finance, all of that, because what has historically happened in India is the lesser you perform, the more you're rewarded. Jitna zyada aapka stock pada raha, you see any developer who defaulted is out of the woods now because prices have gone up. So I think this phenomena you will see and will continue to see unless the I don't want to use the word, the shit hits the fan, you would have this dragging of the feet happening. Because अभी वो marketing हो गई 10,000 पे, तो जो अगला customer है, जो आपका buyer है 10,000 पे खरीद लिया, अगले को 9 पे बेचोगे, वो आपको परेशान करेगा. So the point is, they are in a catch-22 situation.
Okay.
So this is a typical real estate phenomena of a bull market, and this is no different from last 3 or 4 cycles that I've seen in the market.
Okay, so then, sure. So then let me take it to the developer himself. Pawan, tell me, this sense of artificial pricing and holding on to prices which do not reflect the market reality or the the local reality as such. Do you think this is something, if sentiment improves, demand go up, would prices further harden? Or this is something that is going to taper out over a period of time and find its own equilibrium?
So I'll try to answer that in multiple parts. One is definitely, as the past data has shown, and even like Sunilji also said, that developers usually cutting their prices of their inventory is usually a phenomena which does not happen unless the developer is in real financial stress and they are trying to sell off their inventory. So usually that's a scenario we generally don't see, right? So the so-called price cut which happens in Indian real estate is usually in the form of developers hanging on to their prices, right? So rather than reducing the price, they just hang on to the price for a couple of years. That is probably one version of price cut what you can talk about. But having said that, the recent demand, like the way you're saying, the demand versus supply, while the debate exists, fundamentally, if you see post-pandemic, the sentiment also had a lot of things to play where people have realized that home is a big commodity. So what happened during pandemic? People started consuming more of this product. People realized that the more and more you consume any product, obviously your value for the product goes up because you talk about it everywhere and everybody wants to consume it more. That's what happened with the home, right? I mean, during pandemic, everybody realized that they're spending a lot of time in home, so they want to consume more of this product, and that is how the pricing also has increased, and because everybody is buying. But fundamentally, if you see in the last 10 years, because of the different shocks the industry went through and also policy changes, there are quite good professional developers which are actually in the market today who really are serious about the long term. So that had definitely an impact on the pricing. It's not just the rush of post pandemic. It's also because of the kind of developers which are giving a good product. So a lot more thinking also is going into the kind of product which is being given. So having said that, this rate cut definitely is a booster sentiment, but will that madly increase the prices? I don't think so. I think already the prices have been a little high, and definitely the demand will go up. So I would say that this will help in retaining the current prices more than increasing the price quite a bit. Of course, time will only tell whether to watch and see, but I feel that more than price increases, I think developers will be happy that they're able to hang on to these prices for a long time.
Okay, and staying on with you, tell me, affordability is an issue, right? And even after pandemic, when the demand revived for the reasons that you are mentioning, we only saw demand reviving in certain segments, okay, which is the top end of the pyramid, right? It didn't really work out at the affordable or even in the mid end segment. And therefore the entire demand supply equation mismatch, the way we have been seeing it, right? But with these kind of initiatives, therefore, when the government is trying to push affordable housing at the same point of time, trying to send some stimuli in on the demand side through these kind of rate cuts, its overall impact of on the immediate and medium front, not on the long term side, but on the immediate and medium term side, what kind of impact do you see there?
You mean all the housings or the luxury or what?
Different segments. If you can give your take on different segments.
See, overall, like you said, the affordability has definitely been a challenge. We don't have too many projects which we are being launched in the real sense of the affordable segment, right? But if you take a step back and see, definitely that's a high velocity segment which every developer wants to tap into. But if you look at the raw material costs today, which is the land, or even the material costs, if you see all the construction materials during the pandemic, they have gone up quite a bit. I mean, the average construction cost of any developer has gone up quite a bit. So it has become all the more challenging. So in fact, if you see the last 18 months data, the so-called affordable segment, the launches in that have shrunk like anything. And particularly in a place like Bangalore, it's very alarming also that, you don't have too many because we have a lot more challenges in terms of land acquisition here. So having said that, if that segment really needs to have a push, then I think there is a lot more developers would expect from the government in terms of probably subsidizing the land or creating some sort of a zones, right? Like the way we have commercial zones and industrial zones. I think there needs to be some sort of an affordable zoning which needs to be done where the land is subsidized and probably auctioned or subsidized by the government. Otherwise, it will be difficult today. If you do the simple math, it's the so-called real affordable is not really there. So I don't think this small push is just going to boost that segment a lot more than what is anticipated. Considering the last 18 months, the amount it has diminished, I think there's a lot more push which is needed actually. Yeah.
Okay, so Rajat, you were very apprehensive about banks passing this on, actually, right? What choice do really consumers have if banks don't pass, right? What are the kind of other things that they can look forward to? Those who are fence sitters, as Nimesh was saying, that their data suggests that these kind of steps actually let a lot of fence sitters take a decision and take the final plunge. But if banks delay this or take a longer period of time, right? Is there any other alternate that consumer can look at?
So with regard to the interest rates, if the banks are not ready to pass on the bait to them, but some banks, as already heard, some banks have done. So one, we can, the current buyers or the current loan guys can shift to the newer banks. But is that 25 basis point enough? I feel it's too less.
Okay.
And then we'll see, people who are on the fence and who want. So real estate is particularly a commodity which, people aspire and people want to buy into. So the current reduction in interest may not be such a big that people will take a decision because of this, but it could be one of the reasons that force them to come inside this and have the benefit of lower interest. So they can go to those, public sector banks like SBI or Canara, whosoever have reduced their interest, take the benefit and, at Indian aspiration, the Indian dream, by ek makan sabke liye, have a house of their own.
Okay, Nimesh, Rajat is making an important, an interesting point that actually the cross-bank transfers of the loans could get impacted if some banks, do decide to pass on vis-a-vis some other banks who do not decide to pass on, and so on and so forth. What's your reading of this?
Well, yes, whenever some event like this happens, there is more queries from customers, more than customers querying the sales team of banks or various DSs. They only tell the customers that I will get your loan done at a cheaper interest rate. That's the honest answer. But typically, what I've seen is that banks do retain, right? So especially in this quarter, I don't see that there will be efforts done by various people. I will get your loan done at a cheaper interest rate, but the banks would retain because nobody would want to lose their customers, especially in this quarter. So I feel that every bank would reduce interest rate. We are already seeing it. A lot of banks have already done it. So the arbitrage, if at all, will reduce.
Okay. Sunil, just tell me the entire property valuation side, right? With all this price hardening and pricing being held upon and so on and so forth, how is that valuation side of the business going to play out?
So we always say valuations are evergreen business. So our businesses fortunately did not get as impacted as others because banks are worried what is the cost of what they have lent. So how much has my portfolio gone down? Hypothetically, they would still want to go and do a valuation. Today, what is happening is there are still loans, and while the market looks at only a smaller picture, bigger projects, bigger pricing, sabki nazar wahin pe. What people don't realize is that there is a poor who's finding a house any which way. And those houses may not be ones that are being supplied by the well-known developers. So what is happening is in Noida, for example, where we are sitting, there are a lot of urban villages. Wahan pe demand is infinite because loans there are, the houses there are from 15 lakhs to 35 lakhs.
Sure.
I have never seen in my life a tsunami of demand that exists in that segment. So you produce as much, it will get consumed.
Okay.
Now you call it that this is not regular, this is irregular, ye violation hai, this and that. Be that as it may, government is not going to give land at a pace that is required for this country, and that is a point that my friend Pawan also made. Land is the key raw material.
Right.
Now, for valuation, wo hardening wale projects jo hain, that's a very small percentage of what we do. Because that's not the market. 2,000 homes at 25,000 rupees in NCR, that's not market. Market is 150,000 homes. So 2-4,000 luxury apartments, they don't apply the market at all. So our business is very proof, it's as strong as ever. It'll go on because it's not really dependent on this segment of the market.
It's just that they drive the sentiments a lot, right?
They
And
drive the
overall narrative and the
sentiments
sentiments a lot.
in the urban middle to rich class. Go to that guy who has a necessity for a house. Go to Bombay. The aspiration today is 1 BHK of 450 to 500 square feet for even a very reasonably well-paid executive who gets paid 4 lakhs a month also. So the pricing is 2 crores. आज बॉम्बे में अच्छा मकान 500 स्क्वायर फुट से कम का भी 1.5 से 2 करोड़ रुपए में मिलता है, and that too if you want a good decent developer. That's an aspiration. So people will aspire for a lesser footprint, but that demand will get catered in this country.
Okay.
वो बॉम्बे में नहीं रहेगा, पूना चला जाएगा. But साहब, I'll work from home. Companies will migrate from Bombay to some Nasik. And we've seen this, and that's how we've grown. Like Delhi, when we go to Lucknow, the bankers say to us, लखनऊ में क्रीम वैल्यूएशन का काम है, आप अयोध्या में करोगे काम? Because there's this technology which is shifting a lot of these jobs out of the main cities. They've gone to Indores of the world.
Yeah.
So valuation, we are very happy in our business that will continue to grow, irrespective of this. But hardening of pricing, to come to your point, will reduce supply of some valuations in that segment. So be it. Doesn't impact our business. Our business has grown 20% year on year for the last 10 years. So, and I think it will keep growing that way.
Okay. I think we had lost Raviji in between. Can you hear us again clearly? All right. So we had lost you in between. There were a couple of interesting points that we had discussed. I'll just take your quick perspective on those points. One point was about this entire hardening of price, right? With demand be stagnating and supply coming forth, prices should ideally soften, but they have been hardening over a period of time. How do you see that phenomena, and do you see that positive sentiment improving and therefore demand moving in northwards would further harden the price, or will it find an equilibrium according to you?
Actually, in my view, that I said earlier also, there is a huge supply gap, demand gap is there. That's why I think so we should analyze the demand trends always in a longer tenure and the broader market cycles rather than the shorter time frame. We are confident that demand in NCR will strengthen further once banks effectively transmit these rate cuts further. I think so we are very, very positive about the demand and supply. I think so In real estate, in long-term perspective, always there is positive thing. Because as an industry, as a demand supply gap, I think so it will be a no rate. I think so no rates will be further reduced. It continue to be positive.
Great. So you're as bullish as ever. That's your trademark signature style.
Can I just intervene one
Yeah.
small thing?
Yes.
See, as a professor in me, I started the first real estate school in the country. We always said that long term real estate is impacted by the demographics. So long term, it is only demographics. Short term, rate cuts, this will only impact it on the short term.
Sure.
So I agree with Ravi ji that you look at the demand, India mein demographics is very high. So big cities will continue to grow. They continue to have demand.
There has to be enough people entering the category.
So there are enough people. So demand perspective is not there. The question is in the short term, maybe here,
Yes.
there.
This was more from a short-term perspective.
Yes.
That long term, we will all understand.
But this rate cut coming at a time when the world geopolitics is shifting to the other side
Yes.
is a very welcome and a bold step of the government. I would not say that this is a small thing because 0.25 is not small. What is small is in an interest rate environment when everybody is fearful. Taking a call that I will generate demand in this country or spurring this by 0.25 basis cut, be that may as small it may be, is a very, very bold step of the government. So I would really welcome it from that perspective.
Okay, so staying on that, let me get onto this question, from an answer from all of you probably. With the current geopolitical situation the way it is, right, and central banks kind of hardening their stance mostly. In India, typically, if you see your inflation is more than 4%, and but still because we had not changed the repo rate for last 5 years, probably it was due, for a variety of reasons. But going forward, therefore, right, a horizon of next 2 to 5 years. How do you see this entire metrics playing out? Would you expect more cuts to happen? Would you expect more stimulus to come? Therefore, in the context of the real estate category, let's start with you, Sumit.
I think if I knew that, then I would be only doing bond markets and become very, very rich. So there is no right answer. But in the 5 years or 4 years or 3 years that I see, I think these geopolitical tensions will ease out at some stage. I don't think so. You have the top man in the US who may seem crazy, but he's a business friendly guy. So I see that at some stage he will even out his relationship with India or whatever countries, and that will become an equilibrium. On the real estate side, I think you're not impacted by these decisions at all. There is a certain amount of demand, and a certain amount of demand has to be catered. Whether that demand goes to luxury or it goes to, as I said, if I don't have the money, I'll go for a smaller house or I'll go a house which is a little far off.
Sure.
They shall continue to play. I really don't think so that there will be cuts in the near future because economy at some stage will have to perform or will have to go really bad for them to really boost artificial side, which is neither the case. I do see a lot of positive impact on India. If China is tariffed, then he will dump steel. So steel industry can be worried.
Sure.
But can they dump houses in India? The answer is no. Our product, though, you can't. It's not tradable product, right?
Sure.
So we will.
No, but raw material getting impacted also impacts the output side of the
raw
industry.
material impact. A lot of hue and cry in this country is 150 rupees a foot. When the steel prices are at very high or very low, so 150 rupees a foot का impact है. And was it passed to the customers? The answer is absolutely not.
Okay.
जब 150 रुपए का benefit या heat मिला, it's passed on to the customer. So Indian real estate market fundamentally is demand driven. It is so resilient that there will be people at all price points to buy. You may get saturated in one market.
Sure.
But there will be 20 other markets. The beauty of Indian real estate is हाउसिंग नहीं चलेगी, कमर्शियल चलेगा, कमर्शियल चलेगा, वेयरहाउस चलेगा, वेयरहाउस नहीं चलेगा, रिटेल चलेगा, रिटेल नहीं चलेगा, डेटा सेंटर चलेगा. तो स्मार्ट बॉयज गैंग will always make money, will always be stable, and you will see developers will quickly diversify.
Okay. Your take, Rajat.
So, Prasun, I believe the geopolitical situation is very uncertain. You don't know what US will do tomorrow itself. You don't know whether the Russia-Ukraine war would be stopped tomorrow itself or it may continue for 6 long months. You don't know our relationship with China, what will happen. Will they dump? Will they not dump? Will they be friendly? Will there be another war with them or not? So the entire situation is so uncertain. You don't know whether things will be resolved, what will be the tariffs, etc., which has a direct impact on everything. How will rupee function? Will dollar be further strengthened? What will the Trump is a Putin friendly guy, one guy on one side, one guy on other side. So we have to be very cautious. Uh, these things will lead to inflation, further rate cuts. But if they are important for growth, these are important. India is now sluggish at 5.4 or 5.5. I also believe India has the labor efficiency has to go up in the world. After China, India is the second or the third country whose labor efficiency has gone up by meets and bounds. So that needs to continue. If that continues, the disposable income will increase and eventually it will push demand. A lot of things will depend upon how AI functions, how technology is developed, and does India takes a lead in that. So everything will have an impact. So I believe this is a very, very uncertain market. We can't predict whether there will be a interest cut or not even in next 1 year. So I leave it at that.
All right. Pawan, taking this question to you, therefore, while we have a perspective here, but sentiment improvement, and specifically from the context of real estate, that's important, and to keep the demand going on and that northward trajectory to sustain. If there are no further actions, as experts are suggesting that they are likely to see any further action on this, do you see this as a risk factor that you'll have to as essentially factor in your planning, or do you think even if we are not looking at any more cuts in the near future or in 2 to 5 year horizon, that will play out well?
Raswinji, as most of my colleagues here have been saying, the domestic consumption story of India is still very strong. So yes, while geopolitical factors are there, and these things affect like the price of oil, how China's economy is performing, whether US Fed is reducing their points. Of course, yes, they definitely have an impact on our country. There's no doubt about that. But having said that, will that immediately create a domino effect here in India? I don't think so, because the consumption here story is so strong, and particularly if you look at even the savings rates of Indians, you see, it's usually people's home decision to buy a home is not an overnight decision in India, right? They have thought about it a lot. They have. It's typically when Indian consumers they make a decision to buy a home, that is when they'll take the next couple of years to even save the down payment. And that is when they come to the market that, I have my 15, 20%, 20, 25% of my down payment ready. And then they start the search. It is never that, they don't have the money for even the down payment and the search is going on. So these kind of fundamentals which are there, the point I'm making is the preparedness with which Indian consumer comes into the market to buy a home, this geopolitical effects, actually the immediate effect, ripples which will create is not going to have an immediate effect. Maybe the the effect on the consumer who's starting his planning today might get affected, and that might show an effect in the next couple of years. But immediately, I don't really think so. I think the consumption story is strong, and yes, we definitely developers need to be cautious about the plans they make, right? Because we are definitely in a bull market of real estate, and this is where all your discipline and caution has to come into place, so that in a bear market of real estate you can survive and come out actually. Yeah.
So Raviji, do you expect any more stimulus to come your way, or whatever is there is good to have right now?
I second to Pavanji's opinion. I think so. Stimulus may come or may not. It doesn't matter so much. But the self-consumption story of India is so high. Suppose we can take a data. We are 140 crore people. We are just living in 3% of the land area of entire Earth. 700 population of entire Earth, and we are 140 crores. 20% population living on 3% of the area, and the 70% land area goes to the agriculture. What means we are so much concentrated because of the demographic thing. Means the the employment opportunities are limited to some of the cosmetics. Means the self-consumption story is so strong. I think it's more of local game also. real estate is more local games. So it will not much more impact because of geopolitical something kind of things. Little bit maybe here or there, but in the long run, I think so. Self-consumption, the biggest thing of India is continue to be a positive thing always.
Okay. Nimesh, how is it going to impact the home loan business?
I would say that one has to be cautiously optimistic, right? So there might be short headwinds because of what is happening globally, but long-term story is intact. So there is no issues. Demographic is on our side. The government is doing the right steps to stimulate demand. Government is making the right investments. As a couple of people said that there's so much land area, large number of people living in small area. Government is making steps to improve infrastructure across the country. It is not that they're only focusing on big cities. So the steps are in the right direction, and definitely from a long-term perspective, there's no looking back. Real estate will grow, and with that, home loan will grow.
All right. So we had a great discussion. Couple of important takeouts. One is the repo rate cut will result in sentiment improvement, and that will help the industry. Second is the overall buoyancy around the India consumption story continues, and therefore real estate as an industry, all from demand, supply, and otherwise from all possible angles, this story is going to continue. Right. I thank all my panelists for their perspectives and point of views, and we'll keep watching MBTV and we'll come back to you with many such insightful shows. Thank you.